Hey everyone! So, let's talk about the revolution happening inside your car. No, I'm not talking about horsepower or fancy new rims. I'm talking about code, and about a company right at the heart of it all, KPIT Technologies. All right, let's get into it.
So here's how we're going to break it down. First, the big picture. Then, we'll get to know KPIT. After that, we'll dive into the numbers, check out what's on the road ahead, and wrap it all up with the final verdict. Simple as that.
All right, section one. For 100 years, we've thought of cars as just, metal and machines. But that's changing. The auto industry is going through maybe the biggest shakeup in its entire history. And the real action, it's not in the engine block anymore, it's in the software.
So let me ask you this. What if your car was actually more software than steel? Just think about that for a second, because that is the core idea driving everything we're about to talk about. The value, the brains, the whole personality of a car, it's all moving from the hardware, the physical stuff, to the complex software running inside.
So why is this happening now? Well, it's kind of like a perfect storm, right? You've got the huge push to electric cars. Then there's the massive race to create self-driving tech. And on top of that, our cars are basically becoming smartphones on wheels. The big automakers, they just can't do all of this on their own. They need help. And that has opened up this huge, brand new market for tech specialists.
Which brings us right to the star of our show. So in the middle of all this chaos and change, who are the brains actually writing the code for this new future? Well, let's meet one of the absolute key players, KPIT Technologies.
And this is really important to understand. KPIT isn't some generic IT firm that just happens to have a few car companies as clients. No way. They're what you'd call a pure-play specialist. Their whole world is automotive software, specifically what the industry calls CASE. That's connected, autonomous, shared, and electric. And you know what? That incredible focus, that's their superpower.
And when you have that kind of laser focus, it leads to some serious strength. We're talking deep, deep expertise. They build these long-term relationships with the biggest names in the auto world. And they've got their own unique tech. So think of them less like a temporary contractor you hire for a job, and more like a crucial part of the team, embedded right there with the automakers.
Okay, so the story sounds great, right? But does the math add up? It's time to pop the hood and take a good look at the financials.
Whoa. Okay, the first number that just jumps off the page is this one, 23.5%. That's their revenue growth in just 1 year. That tells you everything. This isn't just talk. They are actually capturing a huge slice of that demand we were just discussing.
And look, this isn't some one-off lucky break. If you look at the timeline here, you can see this has been building for years. It's a really steady, consistent climb year after year. That's some serious momentum, and it's continuing right into their latest results.
But, we got to keep it real. No company is perfect. So on one side, you have the good stuff, that amazing growth. Margins are getting better. They're generating a lot of cash. A really strong story. But on the other side, you have the things to watch out for. They depend a lot on their top 5 clients. And they're exposed to things like currency fluctuations. So it's a balanced review for sure. This little table gives us a great health check at a glance. And for me, 2 things really stand out. First, check out that debt-to-equity ratio. It's just 0.12. That's super low. It basically means they're not drowning in debt. And then, look at this, R&D to sales. They're pouring 8.5% of their revenue right back into creating new tech. In this game, that is absolutely critical.
All right, so that's the picture today, but what about tomorrow? Let's look down the road a bit. And what we find is that classic story. Huge, huge opportunity, but also some pretty significant risks.
So analysts love to play out different scenarios. You've got your bear case, that's the kind of pessimistic what if things go south view. And you've got the bull case, which is the super optimistic everything goes right future. And right there in the middle, you have the base case, what the analyst thinks is the most probable outcome.
And that base case, the most likely scenario, it lands on a fair value of 1,450 rupees. Now remember that number because it's the key to the whole final verdict.
Okay, we've looked at the industry. We've looked at the company, we've dug into the numbers and the future possibilities. It all boils down to this. What's the final verdict? Is it a buy, a hold, or a sell?
And there you have it. The rating is a buy. And the reason? Simple. Strong fundamentals.
Remember that number we told you to keep in mind? 1,450 rupees? Well, here it is again. That's the analyst's target price for the next 12 months. And based on where the stock was trading, that suggests a potential upside of almost 13%.
So why the buy rating? What's the case for it? Well, it really comes down to these 5 key things. 1, they're tech leaders. 2, their market has a massive runway for growth. 3, their financials are rock solid. 4, they work with the best of the best. And 5, the management team just knows how to get things done.
But, and this is a big but, you have to keep the risks in mind. The stock's price is already pretty high, so there isn't a lot of room for mistakes. There's always the risk that some huge tech giant decides to jump into this market. And that dependence on just a few big customers, that's a real risk you can't ignore. It's all about having that balanced view. And that really brings us full circle, back to that first idea. As our cars literally transform into rolling supercomputers, you have to ask yourself, who is going to write the code for the future of how we all move? It's a huge question. And a company like KPIT, well, they're betting everything that the answer is them. Thanks for tuning in.